Financial statements are kind of like a doctor's printout of your results when you go in for blood tests or whatever. It's the financial statements give you the health of the business. So you're looking at it basically a profit and loss statement, a balance sheet, are the two basics. The profit and loss will tell you how much money did you take in, how much money did you spend, what was your net income. Now there are mitigating factors here that some things that you spend money on won't show up on your profit and loss. You may say, okay, I brought in $30,000 this month. I spent $25,000 on expenses. I got a net income of $5,000. Well, that is true on your P&L statement, but if you're paying off something that's coming off your balance sheet, for instance, most of your loans, long-term liabilities, those types of things are considered balance sheet items. And so when you pay that, it doesn't show up on the P&L. It comes off of your balance sheet as you're reducing the liability, and it's going from being a liability to being equity in terms of the accounts. But that doesn't mean much to most people. But what they have to understand is you have to look at both places if you're paying off debt, because that debt, you may have paid $5,000 in debt last month, and that $5,000 in net income becomes zero in reality, because you've used that net income to pay your debt, and it doesn't show up over here on your P&L, but it's gone. And so you keep wondering why you don't have any money. Well, yeah, it's those kind of things. But the bigger picture is that the P&L will tell you, if a business owner will analyze their P&L statement regularly for a few months, they will understand and get to realize what their expenses are. And in a lot of cases, you'll uncover expenses that you didn't remember or realize you were paying, or you may be paying too much. And just by looking at them with a clear eye and a fresh look on things, you can say, okay, why am I spending $800 a month on phones? I've only got a couple of phones. Well, there may have been some that got turned off and never got taken off the bill, or sometimes you get an item that you put on a automatic withdrawal from your account, and after a few months you quit using it, but you forget about it, and that $50 or $75 a month keeps coming out of your account every month. And sometimes it's as simple as, we're spending a lot of money on repairs for equipment. If I look at how much money I spent to repair this forklift, for instance, over the last year, I could have leased a new one or bought a new one and been money ahead. And there comes a point in every piece of equipment's life where it costs you more to run it than what it's worth. You could buy a new one or rent it or lease a new one for less than what you're investing in maintenance costs. So all these kind of things, you have to really kind of pick things out and analyze them. And best way to do it is go through it line by line and look at each one, pull the detail up as to what all the line items are in that account, so that you can see where the money's going, and then analyze it and say, okay, can I do without this? Is there a better way to do this? Technology may have changed since you started that. There's a million different things that come into play, but the bottom line is, if you're looking at those numbers and you do it spend a little time on it, the first few times you do it, it will become context. We had a client who was a professional services guy, and he was grossing somewhere around $300,000 a year, but he was never could have any money to do anything. Every time he was looking for money, he was short and couldn't figure out what was going on, why he was bringing all this money in but never had any for himself. he got us involved. He was to the point where he was ready to shut the doors and go to work for somebody else. And he brought us in, and we started working with him. We developed budgets. We started providing him with financial statements and going over the numbers with him and looking at cash flow and doing a number of different things. And we were able to get him back online, and he could take that same revenue that he was getting, and all of a sudden, over time, he was able to have a salary, take a bonus, do these things that he never was able to do in the past because the money was just kind of going every which way. But he actually got quite proficient at it, and ultimately was able to sell the business and move on to something else. So it worked out well, where he was going to shut the doors and get nothing, and he worked it for a few years and was able to sell it at a profit and do well for himself. He was very he was a very big proponent of the cash flow management, because he was able to see that cash flow management was the core to solving the problem. Being able to identify where the money's coming in, where it's going out, where it might be leaking out, and by doing that, he was able to really visualize the big picture, and it gave him the ability to look at things and look at the numbers and the statements and say, okay, I see what you're saying. We've got all this money coming in, and here's where it's going, and some of the places it's going are not value add. So
Yeah.
he was able to pare that back and make it work.